We find ourselves at something of a watershed moment for cryptocurrencies. Wall Street traders can now place their bets on the future of Bitcoin. That's because Bitcoin futures contracts debuted last night, which are basically an investment vehicle that lets you bet on Bitcoin without actually buying the underlying asset. It also lets big institutions like pension funds get in on the action. Futures are available for a number of commodities. Here's a quick explainer from the classic film, Trading Places.
Commodities are agricultural products, like coffee that you had for breakfast, wheat, which is used to make bread, pork bellies, which is used to make bacon, which you might find in a bacon and lettuce and tomato sandwich. And then there are other commodities like frozen orange juice and gold.
I love that movie. When trading went live, Bitcoin shot up more than $1,000 in the first 10 minutes, but those futures contracts went up even more. 2 trading halts were triggered as volume exceeded expectations. $40 million worth of Bitcoin futures changed hands in the first 8 hours. But that pales in comparison to actual Bitcoin trading, which was more than $1 billion during the same period. But activity on Bitcoin futures trading could have been much, much higher. A number of banks and brokers still aren't offering Bitcoin futures trading to clients, at least not yet. They want to see how things shake out first. But there are others who are convinced the sky's the limit.
I have never in my life seen such a mind-boggling imbalance between supply and demand. And Bitcoin, in my opinion, is significantly undervalued, even though it has already gone up 2,000% this year.
That was Ronnie Moaz on this program last year. To get a futures trader's insight into today's news, though, we have Tim Pickering, founder and chief investment officer with Auspice Capital. Tim, what sort of a watershed moment is this, that we can now finally see big institutional money move into the cryptocurrency market?
Well, I think what the futures do is they legitimize a cryptocurrency as something that is going to be here for a while. And it also levels the playing field between buyers and sellers and really gives access to a lot of typical market participants, both retail and institutional.
So when we look back on this, say, 10 years from now, are you convinced that, because on the one hand, people are saying this is going to be that Katie Couric moment of the host leaning in and saying, what is the internet? Or is this going to be us looking back at, what is a CDO and what is a mortgage-backed security? Does this tell you one way or the other which way you think we're headed?
What I'd say is there's lots of futures contracts in history that don't last forever. Is Bitcoin the cryptocurrency that's going to last? It's hard to say at this point. This does add legitimacy to it, again, because it's putting it in a forum that's designed to protect investors' assets, that's been around and time-tested for a long, long time. So I think in the future we'll look back at this as just a moment, and whether it's Bitcoin or other cryptocurrencies, it's hard to say at this point. But for us as an investor and a trader in the marketplace, it's just another tool and another way to participate in the volatility of a market.
One of those ways of participating is going to be shorting. Do you expect to see a lot of people using futures contracts to short Bitcoin, given how high it's gone just in the last, even few months?
Well, it comes down to a structural aspect of futures. If there's a buyer of a futures contract, there's inherently a seller. So there's already buyers and sellers. It's not just a one-way street. And so it absolutely does bring that into play. And there are going to be people interested in using the short side of the futures contract. There's going to be miners that are involved in the Bitcoin process. There's going to be people that are trying to arbitrage between what we'll call the physical Bitcoin and the futures market. Right now, there's a premium in the futures market versus the physical Bitcoin exchanges. And that can close due to arbitrage, trading both instruments. So it's an elemental part of the equation.
So we have CBOE that launched last night, the Chicago Options Exchange. We have CME coming up very soon. I think, there's going to be proper market trading starting in 2018. Do we expect to see, with just the volume that comes with that institutional traders now have an access and a way to trade on Bitcoin that doesn't involve going to the exchanges that are notoriously volatile themselves? Do you expect to see the volume of trades around Bitcoin really soar through the first, few months of this at the very least?
I think we're going to see them grow tremendously. I mean, at Auspice, we use futures as our primary vehicle to invest in the markets, whether they be commodities like you talked about in your trading places piece, or financial instruments like other currencies. The liquidity is going to beget more liquidity and more participation by bigger and bigger institutions who are looking for a way to participate in the market movements and the trends. That's what we're looking for at Auspice, and I think we're going to see that carry right on up to large institutions. But don't forget, this is now a very legitimate way for retail investors. Anybody can go open a futures account.
No doubt. Tim, thanks for this. We really appreciate it. Tim Pickering, founder
anytime.
and Chief Investment Officer with Auspice Capital.